Hello friends, a very warm welcome to my channel. In this video, we are going to talk about a company called Enviro Infra Engineers. This is a recently listed company into wastewater management space, and the focus of the government and their spend in this sector is increasing day by day. Before we begin, if you're new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. Just a small disclaimer, this is not a stock recommendation. We are discussing only for educational purposes. This talk was also picked up by the audience in a poll on our Telegram channel. I'm a SEBI Registered Research Analyst, and I or my clients may have positions in this stock. I may change my view on this stock based on the quarterly results or any major event going forward. And this is a crisp video sharing only the important points. This is not a full-fledged analysis. This will be the flow of our discussion. We'll talk about the business model of the company in brief. We'll look at the stock performance post-listing. We'll see the main financial parameters. We'll discuss why the stock has shown weakness in the recent few months. We'll understand the outlook of the management for the next few years. We'll talk about the valuations at present, the risks of investing in this business, and then form an overall view on the company. So this company was started in 2009 and it is into design, construction and operation and maintenance of water and wastewater management projects. So they have public sector enterprises as well as private companies as their clients. They also work on water supply projects. So if there is a area where there is no water supply and the government takes the initiative of extending water supply to that region, that kind of projects are also taken up by this company. They have presence in 11 states and more than 1,000 people work in this company. Out of that, more than 200 people are engineers. In terms of their broad service offerings, these are the offerings: sewage treatment plants, common effluent treatment plants, and water supply project. When it comes to the public sector undertakings, their customers are NMCG, Jal Nigam, the different municipalities or different states, public works departments, and other than this, they have private clients also. These are some of their major projects this company has taken up in the recent times. So by looking at this projects, you will understand the scale of work which this company has the capability to do. Geography wise, within India, their major contributors to revenue are from Madhya Pradesh, Rajasthan, Uttar Pradesh and Gujarat. The company brought an IPO at 148 rupees and there was a decent listing above 200 and there was a rally of almost 375 to 400 rupees. But as the valuations became rich and the market sentiment was weak, the stock witnessed a correction and now it is trading at somewhere around 220 rupees, which is almost the same region where the listing took place. In terms of numbers, they did a revenue of about 100 crores in FY21, which was a COVID year, and this has risen to almost 978 crores in the trailing 12 months. EBITDA has also expanded from 13 crores in FY21 to 242 crores in the trailing 12 months. Margins have fairly been stable. They are doing at somewhere around 24-25% kind of an EBITDA in the last 3 to 5 years, which is a fairly good margin compared to its peers like EMS Limited. One concern in this company is that debt is rising every year. We have to see post the IPO how the company is managing their debt. And in this business, working capital management is important. They have to collect the payment for the work done in time and also manage their cash flows well. Otherwise, they will fall short of working capital to grow the business and the debt will continuously rise. Now, what led to the cooling off of the stock price from almost 400 region to 200 region now? The primary reason is the weak market sentiment coupled with, in this case, high valuations, because post-listing in the rally, the valuations became very expensive. So the PE got derated and the stock witnessed a correction. Fundamental wise, in this quarter also, December quarter also, the results were good. So there is no fundamental change in terms of results of the company. Before we move forward, if you're not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning, I share my views on the market, how the market will behave, how you have to manage your portfolio so that benefits you in your portfolio allocation. So what are the growth prospects of the company going forward? Compared to that 900 to 1000 crore revenue in the trailing 12 months, they have an order book of almost 1700 crores and an O&M order book of 700 crores. So although these numbers look good, but compared to the trailing 12 months revenue, the order book is supposed to be much better. This is not even 2x of the trailing 12 months revenue. The company wants to focus on increasing the size of each project so that they can take up bigger projects and grow faster. They want to expand their presence in other geographies apart from the 3-4 major states which we just spoke about to eastern and southern Indian region. They are entering some waste to energy initiatives, and as they take up bigger and bigger projects, their pre-qualification increases and the person who is initiating the tender approves them for a bigger project. They've formed a subsidiary to take up some green energy projects. We have to see going forward how well they scale this. As of now, it is not something major. And they are bidding for projects worth about 2000 crores. So as and when they win this, they will this will also get accumulated in their order book. The management is guiding for a growth of about 35 to 45% for the next 3-4 years going forward, and they expect the margins to maintain at the similar range, and we have seen these are getting maintained in the last 3-4 years also. So there is a clear visibility of growth going forward, but the order book has to be closely tracked. When we talk about the valuations, at one point of time post listing, the valuation became as high as more than 40 times, but for this sector in general, the valuations are somewhere around 20-25 times. So now as the stock has fallen down, the valuations have got normalized. What are the risks of investing in a company like this? These are hugely dependent on the spending which the government does in this sector. In case the government decides to defer the spending, lower the amount, these business will be drastically impacted. The projects will be slowed down, or the smaller projects only will be approved. Working capital management is very important in this business, as there are no major fixed assets. These are more kind of EPC players. We have to closely monitor their order book. Other than the existing revenue, the future order book should be at least 2-3 times that revenue. Otherwise, going forward in the next year, we will witness a slowdown in the revenue. And payments have to be timely collected. If there is a delay in payment, then there could be a working capital issue for such companies. So now that you've understood the business model of the company, you've understood the growth prospects, the valuations, the financial numbers, what is an overall view on the stock? If you're holding this company and you have not exited at the top, now you can continue to hold because the valuations have got normalized, and as the company delivers good numbers in the next few quarters, the stock price may continue to go up. So it is too late to sell for you. But if you're looking at fresh entries in this company, you have to closely monitor the order book. And even if you want to enter, as the valuations are fairly reasonable at these levels, you have to enter in a staggered manner, primarily for two reasons. First reason is the market sentiment is weak and the correction may continue for some more time. Second reason for having a staggered accumulation is the order book is not very strong. So as you see that the order book is maintained going forward, you should increase your position size in such companies, and if you see that the order book is not getting increased, then you should exit. So that's about Enviro Infra Engineers. I hope you like the crisp analysis. If you like it, hit the like button, subscribe to the channel. If you want me to make videos on your favorite stocks, do mention the names in the comment section. Even this name was picked up from the last video's comments. Join our Telegram channel to be in touch with me on a daily basis. Thank you for watching and have a wonderful day.